Okay, so I've got some urgent news for you. The market is puking right now, and you need to know why. Let's talk about it. Okay, so for those of you who are just hearing about this, the market is tanking very dramatically as I'm speaking. So why is this happening? Well, there was a jobs report out today from ADP, and it really shocked the market. Now, unexpected news is what makes markets and stocks or anything have a dramatic spikes in one direction or another, right? And today was a very dramatic, unexpected news event. So let's take a quick look at the news and talk about why it's having such a devastating effect on the market today. So headline, what the heck? ADP reports massive surge in employment in June. The U.S. economy added a stunning 497 jobs in June, according to ADP's employment report. That's more than double the 225,000 expected. And you can see this current surge. We haven't had this kind of report since back here in 2022. This is the biggest monthly jump since February of 2022. So more than a year, well, a year and a half. And here's a breakdown of all the different industries. I'll let you look at this on your own. You can pause and freeze this, on your own. Now, on the bright side, for the Fed anyway, wage growth slowed. Job stayers saw a one-year increase of 6.4%, down from 6.6% in May. So what effect is this news having on the markets? So right now, as I'm recording this, we're almost halfway through the trading day. So it's late morning here as I record this. So who knows, the market could have a little bit of a rally or sell off more between now and the next couple hours. But let's take a look at the initial reaction by Wall Street to this news. Okay, so the market at the moment is down 450 points. And let me refresh this. Okay, so the market is down 445 points. This is today's action. This is the 1 month chart. Let's go back a little further. Okay, this is the 3 month chart. Now we saw the market was having a rally there. And I was telling people, don't believe this rally. Don't trust this rally. But this last peak here, that was an important peak. And I was expecting a sell-off anyway, but not like this. This is dramatic. This is sharp. So now we have a double top put in here in the market short term. So this is going to be virtually impossible to take out anytime soon. And for the fun of it, let's take a look at the crypto market. Let's take a look at Bitcoin. Okay, Bitcoin having a little bit of a bounce here. Now you can see overnight here. Now this is the 24-hour chart on Bitcoin. It was having Bitcoin was on the verge of having a massive breakout. Right now it's at at 30,004. I mean, it's still relatively strong recently. I mean, let's take a look at the 7-day chart. All right, so you see Bitcoin this morning, it had a big pump and is ready to break out this high back here. And it did. It took it out a little bit. But then the ADP number came out and this happened. Now, this is a very, very short-term chart, right? So, I mean, anything could happen. But the bond market is selling off and yields are flying. Listen, the 2-year yield right now, the 2-year treasury yield is over 5%. I think it's like 5.5% now. So people are thinking, well, why would I put money into a dividend paying stock when I can get 5.5% from the US government, guaranteed? Well, unless they default, right? But it's guaranteed. Now, this is a classic example of the message that I've been giving you people about how Wall Street thinks a little bit differently than the average person, because you and I are thinking, geez, a really strong jobs report. That's good, right? That's supposed to be good news. More people are getting jobs. Well, Wall Street sees it as bad news. Why? Because remember, for the past year, the Federal Reserve has been on a very aggressive rate hike move in order to fight inflation. That's their job, right? Their primary mandate is to keep inflation low. Their target is 2%. So they've been raising rates dramatically. And that is what has caused a lot of suffering to the average person out there, because everything is more expensive. But the process of raising rates is supposed to be an agonizing event. It's supposed to make your life difficult, because the idea is to get you to stop spending money. Because the more money more people spend, the more inflation there is, right? So they want to get you to stop spending money. So they're purposely trying to make you poorer by raising rates. So what the Federal Reserve wants, they want to see signs of pain. They want to see signs that you are not spending your money. They don't want good economic news, literally, because that leads to more inflation. So they are purposely trying to drive down, strong economic activity to bring inflation under control. So when this kind of news comes out, it's good news for a typical person, But from the Fed's perspective, it's bad news because that means they've got to raise rates even more in order to convince you to stop spending more money. They have to make it more expensive to buy a house, to buy a car, to live your life. Now, Wall Street doesn't like the idea of higher rates. They like the idea of free money. So this news today makes Wall Street anticipate that the Federal Reserve is going to go back to their tightening policy. Now, they've been on a little bit of a pause lately, right? That's why the market's been rallying lately, because Wall Street assumed that the Federal Reserve was going to put a pause on their rate hikes and maybe even start lowering rates. This is the game that's being played on Wall Street, right? They're always trying to read the tea leaves. They're always trying to anticipate what's going to happen 6 months down the road. Wall Street is a discounting mechanism. So this is a classic textbook example of how good news can be bad news from an investing perspective. And the reason why it's down so sharply today is because it was a surprise. Wall Street always acts the most dramatically when a news event is a surprise event. And I want to make one final point about the real estate market, because I've been telling you that there is going to be a comeuppance in the real estate market. But real estate prices have been staying stubbornly high. And if you're wondering why, I'll tell you why. Because a lot of people bought their houses when interest rates were low, and they had a 1 or 2 or 3% mortgage, maybe even a 4% mortgage. Well, now that interest rates are going up and up and up, they don't want to sell their house, because if they sell their existing house, with their existing mortgage at a low interest rate, they're going to have to go out and buy another house, right? They need a place to live, right? But the new interest rate is going to be dramatically higher. So people are stubbornly holding on to their houses. They want to enjoy that low interest rate mortgage that they got. So people aren't selling. So when you get a person out there who wants to buy, but they can't find anybody to sell, that's supply and demand, right? That's why the price of real estate has been staying stubbornly high. There will be a tipping point, though, there in that process, and we'll talk about that another day. But because I would expect real estate to stay stubbornly high, at least for the near term, that's going to add more to inflation because everything's more expensive. Now, this ADP number is a one-day event, right? So we'll just have to wait and see how Wall Street feels about this in aggregate. We'll need a little bit of time for the street to kind of settle in on the bigger picture implications of this news. But I did want to point out what is happening literally today. And as I said, I'm recording this video halfway through the trading day. So who knows, maybe it will recover by the end of the day. But I just want to make sure that you were alerted and give you some context about why the market is doing what it's doing today. And it does drive home the importance of our mantra: reduce your exposure to your bank, buy some gold and silver, and establish streams of passive recurring income. So that's it. That's my little message for the day. Please give all of our videos a like, and I'll see you tomorrow.
Copy that.